Welcome to the Small Axe Podcast. It's your boy Nico, the multifamily family man. We are going to talk about everything regarding multifamily real estate investing. Stick with me. This podcast episode is going to be epic. Okay, my peeps, welcome back to another epic episode of the Small Axe Podcast. Let's get into it. So today I want to talk about how I would get started in multifamily real estate if I had to start again completely from scratch. Not in 2020, let's say, when the interest rates were super low, not when it seemed like every deal worked. I mean, like right now, like today. So stick with me. This is going to be an epic episode. If I had to start from scratch, rebuild from nothing today, start all over, what would I actually do? The first thing I would do is decide whether I want to be an LP or a GP. I think a lot of people jump right into this wanting to be GPs because of what they hear about it online, what they see in social media posts, or just like the prestige that comes with owning apartment buildings. It's pretty cool. I get it. They hear about finding deals, raising money, buying apartment buildings, and they think all that is super cool, like me. But before you decide that that's the path for you, it is important to understand what both roles actually look like. An LP, or limited partner, is typically just the investor. What they do is they bring capital to a deal, and they are not responsible for running the property. They are not talking to brokers every day, not underwriting deals at night, managing renovations, dealing with lenders, handling resident issues, tenant turnover, CapEx costs that are through the roof, etc. Their job is to find a sponsor that they trust, understand the deal, understand the market, and invest their capital, and then monitor that investment. That benefit is huge, and it actually is passive income because all you need to do is some work upfront to figure out who you're going to invest with, invest your capital, and then watch the mailbox money come in. You can continue focusing on your career, your business, your family, retirement, whatever it is that's important to you, while your money is now making money for you inside of that real estate investment. The trade-off is, though, you do not get to control the decisions. So once you invest, you are trusting that operator, that sponsor, or that team to execute on the business plan that they laid out to you in the beginning. So you really have to know what you're doing as well as an LP. You can't just invest with anybody in any deal. And that's something that people really didn't understand in 2020 through 22. People were literally throwing money at deals and sponsors that they really had no idea what was going on with. And it's unfortunate that some of those deals went south. So just be very careful. Now, on the other side, we have a GP, a general partner. The GP is responsible for finding the deal, analyzing it, negotiating it, securing financing, raising capital, overseeing the property manager, the property management team, communicating with investors, and making sure that the actual business plan is executed. Yes, there can be more upside as a GP if the deal performs well or outperforms, but there is also more responsibility, more risk, and a much larger time commitment. And neither path is wrong. They're just very different. Remember, a general partner is typically going to be signing on a loan. So if that deal goes south, the bank is going to go after the general partner, not the limited partner. So the limited partner has protection. And what I've seen over the past 6 years of my multifamily career is the LPs get paid and the GPs don't. So the GPs are putting in a lot of time and effort and energy towards these projects, and they're not outperforming, so they're not necessarily getting paid on the GP side. Of course, a GP is also going to invest their capital as an LP, which is extremely important as well. And that's where they're going to see the returns. But if you have a W-2 or you have a life and you want to not necessarily focus exclusively on making sure the property runs well and actually running a full-time business, then you might want to consider being an LP, because I am a GP on all of my deals, but I'm also an LP on all my deals. And all of the distributions go right into the LP bucket. I don't see anything as a GP, and it's pretty tough. But I do like the control aspect, and I do like the educational aspect behind it. I also like knowing that I am the one in the driver's seat and that I have full confidence in myself, and I don't necessarily trust anybody else with my capital today. But I want to give you guys more of a clear roadmap today because this is something that I would have loved to have had when I began my career. If I were to start over today, I would probably spend the first 6 months focusing on education, and I would invest passively as an LP if I had that capital. So the reason is simple. I would want to learn while my money is working. So learn while you earn. I would pay attention to the investor updates. I would pay attention to how the sponsor or the operator communicates, also does the webinar, also executes on the business plan to follow along with what the market is doing as well, and just see how they study and they work. I would review operating reports and learn how the business functions from the investor side. I would request inside access from the operator and talk to them a lot and ask a lot of questions. At the same time, I would be learning the language of multifamily real estate. I would make sure I understood concepts like NOI, cap rates, cash on cash returns, DSCR, debt service, rent roll, T12, P&L, preferred returns, refinance proceeds, equity multiples, and so much more. Not because I need to become an expert overnight, but because I need enough knowledge to evaluate opportunities intelligently in this space. One mistake I see people make is that they spend years consuming content without ever taking action. On the other hand, some people rush into deals too quickly before they understand what they're actually buying or getting into, or even understand the industry itself. That's a no-no. The goal is to find a balance between education and execution. After those first 6 months, I would then continue building relationships and learning the business. I would pick a market from month 6 to 12 and study it deeply. I would not go after 10 different markets. I would literally focus on one market for those next 6 months. So 0 to 6, I invest as an LP. 6 to 12 months, I am now focusing on one market to study and go deep on. I would learn where the rents are. I would learn about the rents and where they are today. I would learn what expenses are in those markets, what properties are actually trading for. I would learn what lenders are willing to finance on, how they finance, what banks are there, what the local lenders are like. I would learn which neighborhoods I like and don't like, where is the path of progress. I would also really cultivate relationships with brokers, lenders, property managers, boots on the ground partners, contractors, attorneys, and other investors, etc. This business is built on relationships, and the people who consistently find opportunities usually are not the smartest people in the room. They're just the people that have spent years building trust and staying in touch with others in the industry. Somewhere between months 12 and 24, I would then look for an opportunity to participate in a deal alongside somebody that is more experienced. Maybe that's as a co-sponsor. That's what I did. Or maybe that's through a joint venture, a JV. The exact structure is not necessarily important right now. What is important is that within month 12 to 24, I would be seeking to partner with somebody who has good experience that I could then learn more from. So now I'm really getting behind the scenes. I would work with somebody hand in hand to essentially find the deal, acquire the deal, do the due diligence, sit in on the lender calls, walk the property, and then after closing, how they take over the property within the first 30 days, what their investor communication is like if they have investors. I would want to watch a deal move from contract to closing and then into operations, no doubt. That's where a tremendous amount of learning happens. And if you can find somebody that is willing to partner with you, that is an epic golden ticket. Many people focus on getting a deal under contract, but the real education starts after the property closes. And if you're not working with somebody that knows what they're doing, you could be in trouble. Now you're working with somebody who's more experienced than you and you're learning from them. So this is month 12 through 24, let's say. And by the time I reach years 2 or 3, I would begin looking for opportunities for myself where I could take a more active leadership role. Maybe that's a 5 unit opportunity. Maybe it's 10, maybe it's 20. The size is not necessarily important as the experience. And at that stage, I would want to be more responsible for finding the opportunity, evaluating it, putting the team together, getting the business plan together, raising the capital, and operating the property. And once I complete that process, I would continue evaluating whether being a GP is truly the path that I want to pursue, because it's going to be challenging. And if you are not aware that it is challenging, I am telling you right now, so that 3 years from now, when you're operating your own deals, you can think back to Nico and what he said. It is challenging. And I think it's an important conversation to have with yourself now. And a lot of people don't do it. They assume that they want to be a GP because they see that there is a potential upside. But what they don't always see is the responsibility and the extra work that comes with it. I am telling you, there is a lot involved. Remember, being a GP means that you're going to be dealing with brokers, sellers, lenders, insurance issues, tax increases, vacancy, turnover, turn costs, maintenance problems, investor communications, issues with investors, increasing expenses, unexpected challenges, etc. Some people discover that they love that responsibility and others don't. Others discover that they'd rather be building wealth as an LP, and neither answer is wrong. The goal is not to become a GP. The goal is to build wealth and create the life that you want. If, after operating my own property, I still loved the business, then somewhere around years 3 and 4, I would start looking for ways to recycle capital. Maybe the property has appreciated from that first LP deal that I did at this point. Maybe the NOI has increased, and maybe a refinance is going to happen and I will get some cash out. So I pull some cash out, and perhaps that will help me buy another deal. Now, one property starts helping me acquire the next. This is where the conveyor belt theory starts taking place. The process becomes less about starting from zero every time and more about building momentum. One deal leads to another. One relationship leads to another. One lesson leads to another. Looking back, that's probably the biggest thing I would focus on if I had to start all over today. I wouldn't worry about becoming an expert overnight. I would not worry about owning hundreds of units today. I would not worry about trying to impress people ever. I would focus on learning, building relationships, understanding the industry through and through, understanding how the math works, the numbers work, and taking consistent action. I would underwrite deals every single day, talk to brokers every day, build my network regularly. I would stay patient, and I would keep moving forward. Because most people don't fail in multifamily because they aren't smart enough. They just fail because they stop. Maybe they stop underwriting, networking, making offers, learning. But the people who stick around long enough eventually develop the skills, relationships, and experience that they need to succeed. It's not always fast, but it works. And if you're willing to stay in this game long enough, multifamily real estate can absolutely change your life. So let me now recap what I would do. Months 0 through 6, I would invest as an LP. Month 6 through 12, I would be finding my own market and going deep on that market while I'm educating through and through throughout this entire 12 months. Month 12 through 24, I would link up with somebody more experienced than me and do a JV opportunity with them or a co-sponsorship opportunity. Month 24 through 36, I would potentially buy my own deal if I had the capital. Maybe that's going to come from the refinance of the LP deal, or maybe it's just coming from somewhere else, or perhaps I can now raise capital because I feel confident doing so. Now, by month 36 through 48, you should have the conveyor belt going and potentially have some refis coming your way, and that will help you get the process going and decide on whether or not you want to still be a GP or just be an LP for life. Hopefully, you're now hooked on real estate at that point. Hopefully, you love multifamily investing. And whether you choose the LP route or the GP route or both in the future is up to you. I love you guys. I hope you rock this week and get out there and go crush it. Thank you so much for joining me today on the Small Axe Podcast. Your attention truly means the world to me. Please leave a rating and write a review. Also, share this episode with somebody that you think could get value from it. Remember, it only takes a small axe to build a lasting empire. So get out there and start building your own.